Do you know how many loans and deposits you're losing because of blind spots within your bank's or credit union's onboarding experience? Now, according to Jim Marous, co publisher of the Financial Brand and CEO of the Digital Banking Report, 46% of newly opened accounts go inactive within the first year. Put another way, almost one out of every two accounts that your financial brand opens has the potential to go inactive within the first 12 months. So, a couple of questions to think about. Number one, how much might onboarding blind spots be costing you right now in the present moment? And then number two, and more importantly, what can you do about it today? Well, let's find out together on today's episode of the Banking on Digital Growth podcast.
You're listening to the Banking on Digital Growth podcast.
Welcome back to the Banking on Digital Growth podcast. I'm James Robert Lay, founder and CEO of the Digital Growth Institute, where we make it easy for growth-minded financial brands to uncover their biggest buying journey blind spots so that they can quickly stop losing loans and deposits. Today's episode is part of the Exponential Insight series, and I'm excited to welcome Har Rai Khalsa to the show. Har Rai is my kind of guy because he's on a mission. He's on a mission to help banks and credit unions take back business from the big mega banks and from the neobanks. And in doing so, he can fulfill his purpose to strengthen local financial institutions and the economies they serve. Now, Har Rai is currently serving as the CEO and co-founder of Swaystack. It is a personalized engagement platform that helps banks and credit unions supercharge their digital channels and punch above their weight using the power of data. Welcome to the show, Har Rai. It is so good to share time with you today, buddy.
Thank you so much, James Robert. Pleasure to be here.
Absolutely. And a big shout out to Cassie and Corey LeBlanc for connecting us together out in Las Vegas at the Financial Brand Forum. I'm so happy that we're able to reconnect. And before we get into our conversation here, what has been going well for you? What is good in your world? What's positive right now?
A ton of change. In the last year, I sold my house. I moved from Dallas to Miami, quit my last job, which was an amazing experience, started a new company, had a new child, my firstborn. So the last year has been busy, James Robert.
Oh my goodness. You are the epitome of banking on change for sure. And I'm curious because you have had a lot of change. How have you dealt with that change? Is that something that is natural for you, or might there be ways that you have dealt with that can help those who are watching or listening deal with change? Because there's a lot of change going on right now at a macro level that's impacting us on a micro level, particularly within financial brands.
Yeah, I mean, when I was very young, I went to boarding school in North India. So at 11 years old, my parents shipped me off to North India to a military school, if you can imagine. And so getting used to kind of life without my parents there and learning how to stand up for myself in the face of the senior boys and all that, I had to grow up at a very young age in order to kind of have that physical, mental, spiritual fortitude to keep up and not to be broken by the circumstance. So I would just say the mantra or affirmation that's always stuck with me is change is the only constant. It's when we fall into a status quo or kind of a lull that we think these are the good old times and they'll always be this way, or they'll never be as good as they are right now, that we forget that change is always upon us. It's kind of always around the next corner. So what I've been doing in terms of trying to keep up in these great times of change is definitely looking forward and trying to anticipate some of the macro changes at the global, socio-political, economic level, making sure that, my balance sheet is diversified, James Robert, and then also that I'm really betting on myself and investing into building out the value of the equity of my business, Swaystack, with my co-founder, Simran. But ultimately, as you know so well, James Robert, it's the value that we create in the world that ends up making us who we are. So just really focused on value creation.
I really appreciate that. And going all the way back to your childhood and that experience, how that experience has shaped your perspective today. Perspective is the sum of context and framing. And one of the things I think it's important just to surface is And I wrote about this in Banking on Change. It's easy to get trapped in the cave of complacency. And the cave of complacency provides a pseudo sense of security. It provides a pseudo sense of confidence because it's easy to enter into the cave thinking that you're going to seek solace from the storm. But in reality, it can in some cases keep you trapped there, and the world's going to pass you by. When I think about change, one of the things I've been thinking about is nothing changes if nothing changes.
Mm.
And we as individuals must continue to look for those opportunities to change. But, thinking about financial services, and I have identified that there are often four impediments to change that hold leaders back: fear of the unknown, fear of change, fear of failure, even fear of success. What's your recommendation, once again, from your personal experience, that might be of value to help someone who is watching or listening that could be held back by fear right now, particularly in turbulent and uncertain times, so that they can escape the cave of complacency and keep moving forward on their own journey of growth?
Yeah, when we think of entrepreneurship at any business, it all starts with why or purpose, and ultimately having kind of a resounding mission that the entire team can get behind. We do need leaders to set that vision and to shine that light. But from purpose, there has to be a worthy adversary for any business to have reason to wake up and get out of bed and go fight the battle of continuing to improve. There has to be a worthy adversary. And this is where I think banks and credit unions struggle, is really who is their worthy adversary. And I think for too long, we looked at the bank or the credit union across the street or on the other corner, and we said, we have to keep up with that bank or that credit union. We have to ensure that we're making the moves that they're making, or we're one move ahead. But what I would suggest here, James Robert, is actually looking for a real worthy adversary, maybe a neobank who's opened 20 plus million accounts in recent years, or maybe a mega bank who's over $1 trillion in assets, and studying those worthy adversaries and their approach to change in the digital first banking landscape, because ultimately they're the ones who are taking our lunch.
You're speaking my language. In Banking on Change, I presented a model. It's the VMVPV model. It's a framework. And the very first V stands for villain. It is the worthy adversary. And the M is the mission. The V is the vision. The P is the purpose. And then the final V are the values. And I know one of the driving purposes for you is to strengthen local financial institutions and then the economies that they serve. Unpack
Absolutely.
that. Why that purpose for you? What's inspiring that?
Yeah, it's a great question, because at this point in my life, I don't have to come to work. I actively and proactively choose to come to work for that mission. I think it goes back to my parents, who really grew up and raised their children in a community first environment where, the village took care of the kids, and I'd run down to my friend's house and we would go on bike rides around the community, and no one was freaked out about me disappearing for an hour or two. They always figure it out and stumble back. But my parents taught me that service to the community is the ultimate form of humility, and service to the community and the power of sacrifice to do so is the last step before happiness. So I think growing up in a family dynamic and a community dynamic showed me the importance of community in terms of kind of building a foundation for not just a family, but an individual on which to stand on and thrive on. So as I started getting into my entrepreneurial journey, it was ultimately the Independent Community Bankers of America, ICBA, Kevin Tweddle, Charles Potts, and the folks over there that gave us a chance in 2019 to be in their inaugural accelerator, the Think Tech Accelerator, really taking a chance on us. We had one or two clients at the time, but it was through that experience, James Robert, where I started traveling to the small towns of Arkansas and North Dakota and all over the nation, and seeing that these community financial institutions really are the backbone of our nation. The barber shop or the local restaurant or the local farmer, all are highly dependent on that institution. And that institution is more loyal, more steadfast and dedicated to those local businesses than any other institution could be, because they know them, they grew up with them, they've seen them there through the generations. So I feel that by serving, as many financial institutions as we can, broadening the number of financial institutions and kind of spreading the assets across this great country. It's really a Robin Hood theory of sorts, James Robert. So not a Robert Hood theory, but a Robin Hood theory. And so we're really looking at the ability to bring value and digital transformation to as many financial institutions across the nation as a way to bring more money to more communities, and therefore more power and strength to more communities.
I agree wholeheartedly. And you use the words that I think about a lot is community financial brands are the backbone of the local economy. And
Mm-hmm.
it's an opportunity to help communities not just survive, but really thrive. And I do see such a strong connection between community institutions and entrepreneurs, and ways to integrate that. Now, I think what's the interesting point here is that's the mission, that's your purpose.
Yes, sir.
However, you recently wrote an article that caught my eye, and it's titled "Why I Don't Have Money with My Credit Union." What's the story behind the story here, for some context?
Yeah, so my last business, MK Decision, was a digital account opening provider that Alchemy Technologies acquired in September 2021, really trying to extend the consumer experience out to the acquisition portion of the funnel, whereas traditionally Alchemy had sat in the digital banking space. So it was in that moment with Alchemy where our North Star was really to get a new consumer from account opening into digital banking as fast as possible. That was our mission. That was the purpose of the product, and we're doing a lot of work to optimize for that straight through process into digital banking, for automatic approvals and whatnot. But where I kind of left off at that point, James Robert, was I said, my job's done. I've opened the account. It's on the core. They now can log in and use the mobile app. And I didn't take that consumer or business journey any further and ask myself, how often are these new accounts actively being used? And so as I started doing research, the great Jim Roos wrote an article saying almost 50% of new accounts opened go inactive within the first year. And so me and my co-founder Simran, who was the co-founder of Zogo, the kind of like Duolingo for financial education, we said, we need to start opening up some accounts with your average bank or your average credit union. And we were very surprised, James Robert, at how little communication we received upon opening those accounts. One of my old friends in a past venture would say that if you aren't staying very close to the new lead, they get abducted by aliens. They just disappear off the face of the earth. And our experience was we had very little follow-up and engagement from the banks and the credit unions we were opening accounts with. And ultimately, it led us to think that this is probably a challenge that more financial institutions than just the ones we were applying for are having, which is they're getting new members and customers to open an account, but then are they actually getting them to fund that account, to bring their direct deposit over to that account, to pay their bills out of that account, to use all digital services within that account, e-statements, SMS, etc., push notifications. And so we were surprised, James Robert, at how few financial institutions look at the onboarding engagement portion of the journey and take it very seriously. It's almost like, oh, I got the account opened, my job's done, move on with my life, assuming that the consumer or small business is going to self-serve thereafter, that they don't need to be educated, that they don't need to be engaged with. And so we saw that as a huge divide between account opening and digital banking, James Robert, and that's really the thesis for Swaystack.
It's interesting that you mentioned the Jim Maroos perspective, or what is it, 45%, 46% of checking accounts go inactive within the first year. I want to roll back on that. Why do you think that is? What's the problem behind the problem here? And before you answer, I want to set a little bit more context. I actually had a conversation with a gentleman. His name is Joey Coleman. He's the author of a book called Never Lose a Customer Again. And he opens up his book specifically writing to the banking vertical. And one of the things that he notes is that 20% of customers leave a bank do so in the first year without ever conducting a single transaction. So 1 out of 5
Wow.
do so without ever conducting a single transaction. I'm going to quote, not one ATM withdrawal, not one check clearing, not one payment of online bill pay. And then he continues, a shocking 50%. So now we're talking 1 out of 2. And I like talking 1 out of 2 versus percentages because I think it's a little bit more real. We're talking about people here, not numbers. We're talking people.
Yeah.
1 out of every 2 people leave within the first year, quit doing business within the first 100 days. So
Wow.
where do you see the gap is? Because you mentioned communication.
Yeah, I mean, I would say that as soon as an account is opened, let's start off with why these accounts go inactive, and then maybe we'll come into some of the solutioning. But I would say first and foremost, the most obvious reason the account goes inactive, James Robert, and it's almost sad to say, but it goes unfunded. If we don't get the initial funding into that new account, it's sort of the follow the money theory.
Yep.
If the initial funding doesn't come in, there's no buy-in, no skin in the game. It's no harm, no foul. They didn't even have to have their credit checked, right? That's a big difference between applying for a loan and opening up a bank account. Is there's no impact to your credit score. So I think that's the first reason that we look at is it's an unfunded account. The next most important reason is they never get the direct deposit set up. From our perspective, the lifeline to an individual's personal finances is their paycheck from their employer. Even if they're an entrepreneur, whether they're paying themselves or they have an employer, the ability for them to pay their bills is dependent on that direct deposit hitting their primary bank account. And then I would say the third challenge here, James Robert, is to your point that 20% of these new account holders don't even make a single transaction. So we're really focused on getting them to transact on the debit card or using the ACH payment rails, because ultimately, if we're able to get their paycheck into the account, then we're going to be able to help them pay their bills out of the account. So those are some of the challenges. And then the lower hanging fruit thereafter is, downloading the mobile app, electronic statements, SMS capabilities, you name it. But then back to the solution. So the fascinating thing that we learned from. Go ahead, sir.
I want to pause you before we get to solution, because I want to press on some of this pain just a little bit more. And the reason that I want to do that is for those who are watching or listening, they might not have context into what is going on outside of their financial brand. And what I mean by that is when working with financial brand leadership teams and even their boards of directors, I often ask, when was the last time that you opened an account or applied for a loan at a neo, at a digital first institution? And many times the vast majority is I've never done that. And so they don't have the perspective of what another experience could not just look like, but more importantly, feel like. And in the article you wrote, you referenced your experience with Chime. And Chime is a brand that we often use to benchmark community financial brands when facilitating website secret shopping studies. And for one specific financial brand, it was a bespoke study that we were facilitating, and it was focused on their application process directly connected to the onboarding. So essentially what we're talking about here today. And we were benchmarking against Chime and one of the national brands. And what we found is that within the first 30 days, and you referenced this in your article, within the first 30, 45 days, Chime was sending 15 to 20 different emails. And I'm surfacing this because whenever I share with financial brand leaders this perspective, they immediately push back and they say, we would never send that many emails. We would never spam our new account holders like that. But here's the thing. 85% of those in this secret shopping cohort had no problem whatsoever. They actually appreciated the number of emails that Chime had sent because each email focused on one specific task that moved them from point A to point B, from point B to point C, just like a helpful and an empathetic guide would, just like Gandalf was guiding Frodo, to Mordor to take care of the ring. It was one step at a time. Why do you think financial brand leaders push back on this perspective?
James Robert, I have a few grays coming in here and there, but I don't know if I'd put myself into Gandalf's shoes right away. But I would just say that
with the beard, you're on the path.
I'm on the path. Yeah, I should have worn all white. Because I'm more of a Gandalf the White than the gray fan personally. But I would just say that I think people are afraid of over communicating, almost to the point where we under communicate, and then the reality check comes in.
Yeah.
The difference in results between over communicating and under communicating, I think, it is in the research and the data that you just brought out. If you're under communicating, you probably fall into that fact that 1 out of 2 of your new consumer accounts goes inactive, or 1 out of 5 of your new consumers never even does a single transaction on that account. Meanwhile, you spent $200 to acquire it end to end. So I would say that the biggest difference with Chime, James Robert, is not just that email sequencing, although it's very powerful because it's kind of pre-digital banking. The real secret sauce that we observed in the Chime experience is how they've transitioned onboarding from that email sequence into digital banking, and that the onboarding is now omni-channel. So you are asking folks to take certain actions via email or educating them on promotions, or your CEO is giving them a personal message at first impression. But once they log into digital banking and now they have access to kind of third-party point solutions like the direct deposit switch companies, or the authentication of a external account companies. Now that we can integrate these third parties into that native mobile app, we're able to do some pretty powerful stuff when it comes to onboarding around funding, direct deposit switch, and subscription transfer. So I really think that's the special sauce, James Robert. If I was going to try and take it a level even further, not only giving the consumer a guided experience to take those most powerful actions when onboarding, whether that's outside of the mobile app or inside the mobile app, but being able to send them emails that show them their progress as well. So we see onboarding after the new account is opened as quintessential to creating sticky, highly profitable relationships.
It reminds me of the work of Dr. BJ Fogg with Tiny Habits, James Clear with Atomic Habits. These are micro commitments. These are micro ask. And I think a lot of times when having assessed onboarding sequences, like the traditional 222, for example, we're asking 3 to 4 to sometimes 5 different steps within one point of communication. And that creates a paradox of choice. So it's too complex. I'm going to do it later. I'm not going to do anything. I'll do it when I have time. I'll do it this weekend, but that time never comes around. And I know that you believe, and because one of the things that Joey Coleman was talking about is the first 100 days. You've taken that framework and moved it into the first 60 days. The first 60 days are critical for educating account holders. Why is that? And what are the specific points of communication, or what types of communication, or what should be communicated within those first 60 days for a financial brand to maximize the relationship that they have with a new account holder? And I think that's the point. Once again, we have to remember that these are people. This is a relationship. The root of relationship is to relate. Where's the opportunity here?
Relate and then sail that ship across this world ocean, right? So I think it starts with them feeling that connection to the story of your brand, and making sure that they understand that there's mission, purpose, and value behind this financial decision that they've made to bring their business to you. I think it's kind of wired into us, James Robert, that people go where they're treated best. So if you're giving them that from the highest level seat in your institution, if you're giving them the sense that you care about their business at the CEO level, I think that's why we see these neobanks thrive, is because their CEOs are speaking to every single consumer right out the gate. That's in that initial welcome letter or email from the CEO. So I think there's something powerful about that. In other words, welcoming a new consumer or business to the bank or credit union is not below the CEO. That's really the tone that is set there, is that from the top down, we are working to earn your business. From there, in terms of actions and ways for them to get the max impact out of their new account, it starts out with that funding relationship. So in our guided onboarding experience, we're able to look down to the account on the core and determine whether funding has happened. A, if it has happened, B, we're able to give them a secondary ACH file to bring funds from an alternative financial institution altogether. So, for example, myself, I have 2 bank accounts. If I was to move to a third, I would want to be able to bring funds quickly from both of those accounts. And sometimes doing that outside of digital banking itself is a convenience. So from our perspective, promotions are also highly effective, James Robert, to get people to take action. And when you look at the types of actions you're trying to get folks to take and the commensurate promotion you may be willing to pay for them to take those actions, I think every organization has to ask themselves. In other words, if Chase or Chime are saying, we'll give you this bounty, $200 or $250, if you open this account and you have direct deposit over X $100 per month, why wouldn't I be willing to pay that amount for the same behavior of one of my new customers or members? And so promotional activity, whether it's promoting them to switch their direct deposit, promoting them to refer on their friends, promoting them to join into any type of kind of macro bank or credit union promotion that's running, we see those as very enticing, because usually there's not too much painstaking effort on their part, but there's the upside of that reward. And so from our part, you really have to do a good job of communicating your values, your mission, your purpose from the top down. You have to do a good job of educating on the most important and influential products and services at their disposal with this account, and giving them incentive in the form of promotion to take those actions. So what we've done, James Robert, is gamified that initial onboarding experience. If you take these 5 to 7 actions, there's a $300 reward on the backside of it. If they don't take them through the email link that we send, we're going to remind them to finish them in their first impression in online banking. So they're logging into the mobile app and it says, you've taken 2 out of 5 actions. If you finish these last 3, we're going to put $300 in your account today. So from our perspective, top down, focus on the consumer, that the CEO is not below serving you and earning your business, and then a wealth of education around the products and services at your disposal and how to take action there, and some of the incentive if you do. And then if there's any other types of promos that are going on, making sure that those are a part of the early communication.
This reminds me of something we experienced, my goodness, probably a decade ago, and we still have the sequence and the workflow. It was between 2013 2014, and they're no longer around, but they were one of the brands that started all of this. It was Simple, that was acquired by BBVA. And Simple's sequence, it starts off with an email from Josh, and it was the thank you. And they actually had a couple of different sequences that we were monitoring. One was on the abandon app, so pre-conversion. They start the apps, they don't complete it. And then we also have the post-conversion. I think what was interesting when we look at the Simple narrative, the most powerful, even in today's digital world, and I think it's going to be even more so true in the age of AI. I want to get you, actually, we'll pause on where we were going. We'll loop back on this. We're going to take a little bit of a detour. The power of human connection, the power of people. I have a hypothesis that as we move further into the age of AI, I'm thinking, I could be completely wrong, but I'm thinking that maybe the pendulum is going to swing further back towards human connection. Um, People connect with people. It's just the way that people connect with people. That's been the big transformation, particularly over the last 30 years since 1994 and the internet reaching the mass consciousness of humanity. Where is there an opportunity, thinking about the onboarding experience, to maybe inject is not the right word, but to integrate more of a human experience to that, to it, to reinforce the human connection, the emotion with a financial brand, so that it's not so transactional, but it's more transformational in nature.
Yeah, and back to your kind of 2 by 2 by 2 philosophy. And in our opinion here, James Robert, we're not saying throw out the good that you may have established within your organization, because it is hard to get folks to make those phone calls, right? So if you have the discipline and the rigor around kind of that high touch approach in communicating to your new customer base, we definitely don't want to disrupt that. And so I would say that the calls and the touches always have value. Certainly, if they're able to communicate that we're only a phone call away and we're always here for you, which is a differentiator in the community financial institution space. When you think about trying to get service from one of these large institutions, I don't know if you've ever tried to get service from Venmo or PayPal. It's like it's all digital, and
Right.
you sometimes find yourself in a never-ending loop of just trying to get some help. But I would say that in the onboarding that's digitized, we've had some financial institutions request the introduction of their digital service platforms, whether that's a Glia or it's an Eltropy or an Agent IQ. They want to make sure that they're at least introducing the thought that we're only a video call away or a phone call away or a chat away. In terms of our service is not just high tech, and we're going to give you the ability to self-service your onboarding and take these actions in a guided, gamified way. But we're also just a click of a button away, and you can get us on camera. Now, in terms of coming into the branch and things along those lines, I really think that every bank and credit union has to say, if somebody's opening an account online, they want a self-service online. And if you start from that assumption that somebody starting online wants to finish online, then the digital onboarding and things like that become more important, because you have to give your ideal client the ability to self-service without coming into the branch.
Sure.
Statistics show the in-branch customer, remember, is the least profitable one. So you really have to give them the tools to self-service. Now, if that's making available your digital service tool for video or chat or phone call, I think that's a meeting of the high tech and the high touch approach.
And that's where we're going to loop this back to this simple narrative, because one of the most powerful quote unquote marketing channels that I believe will still continue in the age of AI is the trusted referral from a friend or a family member. And I often see that there are gaps in that onboarding experience. And I wrote about this in my first book, Banking on Digital Growth, and I provided a framework. It's the banker strategy circle: build an audience, attract with personalized offers, nurture through content and automation, convert for loans and deposits, expand the relationships within the first 90 days, and then repeat the process with ratings, reviews, and referrals. Where do referrals play into, or where is the opportunity for referrals, thinking about an experience here that, you know what, they feel really good, they applied, oh my gosh, they're highly impressed with the onboarding, life was easy, it took away all my anxiety, and we know that there's an inherently high cognitive load tied to money already, so we've reduced all of that. Now ask for the rating, ask for the review, ask for the referral. What's your take on that?
Yeah. I mean, we do include refer a friend within one of our first 6 or 7 steps in the guided flow. It can be included in kind of the gamified experience within online banking that once they refer that off to a friend and they open an account and set up direct deposit, you can pay a bounty. But I would say that the referral and all of these actions for that matter, James Robert, they don't always get taken at the first impression. And so the ability to follow up on these asks is also important. Like for example, Capital One, I use them as a credit card, and I have a lot of stories out there about why I never gave them my deposit business. Notably because they made me fat finger my routing and account number, and they never got my business. But what I would say is they ask me to refer a friend almost monthly. They are literally saying, we will give you 20,000, 50,000, points if you refer a friend. And so the kind of the steadfast approach that an institution like Capital One takes to trying to cross-sell you from its loan products to its deposit products, or just trying to nurture you from a single product account holder to somebody who's now referring or recommending that business to one of their friends. I think they've done one of the best bang-up jobs I've seen on this. So where referral comes into the SwayStack onboarding flow is near the end. I will say it's near the end because funding, direct deposit, switch, subscription transfer, e-statement, SMS opt-in come before. But referrals, giving them the simple ability to access the contacts within their phone, giving them the ability to copy a link, unique link with a UTM code that can be tracked down to the account opening conversion. And then also giving them one-tap access to share that link out through all their social media channels. So those three components of the referral mechanism are very important. Quick copy, ability to access all the contacts, one tap access to all my social media channels, even if I want to direct message one of my friends. So we do think it's important, and I'll use the Capital One example of almost a monthly follow-up requesting me to make a referral as how steadfast and tenacious folks ought to be.
Sure. No, that's a great practical example. And speaking of practical examples, as we start to wrap up, for someone who is watching or listening, they might be thinking about their own onboarding experience right now. They might be thinking, I know we could do an even better job. What would your recommendation be for a next best step that they could take, something small that they can apply today, tomorrow, practically, to begin to move forward and make progress to make that onboarding experience even better?
Let's say there's four levels to onboarding. The lowest level is you do nothing. That's the lowest level. The next level is you have a simple, nice, automated email journey. That's the next level. The third level, I would say, is you have the ability to send out a personalized URL that gamifies or guides a consumer or business through the most important steps and allows the bankers to take action on them as well. The fourth level, I would say, is the ability to send a personalized URL out through email because that individual may have never accessed online banking, but then to persist the onboarding into digital banking like Chime. So I think if you look at those four levels, if you're doing nothing today, it can only get better than that, right? And so I would immediately try and put an automated email journey in to educate and inform the consumer on your institution, its missions, its values, products, and services. But that next step, without any integration into digital banking, is sending them a personalized URL to gamify the most important actions that we want them to take and giving them some incentive to do so. If you are on the cutting edge and you are really trying to compete with the worthy adversary, let's call that Chime or Chase, you need the ability to deploy a personalized URL out through email with your email onboarding sequence, but persist onboarding into digital banking because they're likely not going to take all those actions through a URL unless you remind them inside of online banking.
It's a great way to wrap things up here at Har Rai. If someone is watching or listening, they want to continue the conversation that we've started, what's the best way for them to reach out and say hello to you?
Absolutely. Yeah. So on swaystack.com, if you just go to our request a demo page, my Calendly is out there. So please feel free to just grab a time, 30, 45 minutes. We don't know if we're the right fit for you yet either. So we always do discovery calls to figure that out, James Robert, and would love to have a conversation with anybody listening today.
Well, I appreciate you for our conversation, for sharing time and space with me. This has been a lot of
Likewise,
fun
James
today. This
Robert.
has been really, really good, really enlightening, really educating. And I appreciate you and wish you well, because I know you are playing the role of the helpful and empathetic guide.
Thank you, sir.
If we're talking Gandalf and we're talking beards, we can also go down the other path and we could reference Obi-Wan Kenobi as well. So thank you so much for the work that you're doing, and
Thank you, brother.
the villain that you're looking to attack, and we can all attack that and get better together.
Yes, sir. Let's keep up.
Let's do it. As always, and until next time, be well, do good, and be the light.